Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 21st of September 2020, and yesterday we published a price speculative video entitled $3,000 to $5,000 gold price anytime soon, where we quoted a particular article suggesting a range of scenarios in which this could actually be achieved during the course of the next few years, and we've placed a link in the description box below. Now today we're going to speak about reality and why silver has crashed through $25 today. And at the time of producing this podcast, which is 1800 hours GMT plus 1, silver is standing at $24.41, down $2.43 or 9%. And gold is currently just holding above 1900 at 1903, down so far $47 or 2.4% on the day, though it has been lower earlier. Well, a number of analysts are stating it's the rise of the US dollar, where the dollar index has in fact risen by 0.8 to 93.74. The theory goes that if the dollar reaches and holds at its 50 EMA at 93.8, then this will prove to be most detrimental, particularly to silver. Well, silver has crashed through its 50 EMA at 25.20 and below its next support level of 24.95, and for some analysts this does suggest a change in trend, particularly if this holds. Well, first let's take a brief look at what Bloomberg published a little over an hour and a half ago, which highlights the situation quite nicely, and this will then be immediately followed by a current article by Reuters, which is just an hour old, so it's a little more up to date, but focusing a little more on gold. And after these, we shall make our own comment and assessment. They are quite short, so do bear with us. Bloomberg article dated September 21st, 2020 at 4:29 p.m. GMT plus 1. Headline: Gold tumbles below $1,900. Silver plunges with dollar rallying. Spot gold slid the most in almost 5 weeks, falling below $1,900 an ounce as a strengthening dollar diminished demand for commodities. Spot gold declined as much as 3.5% to $1,882.51 an ounce, and silver plunged as much as 11% as the Bloomberg Dollar Spot Index headed for its biggest gain since June. Stocks tumbled amid concerns that economies will be hit by tighter coronavirus restrictions. Equities fell out and the dollar strengthened amid the broad risk-off sentiment in the market, said Janet Mirasola, managing director at Sukden Futures. Gold was a victim of a strong dollar. Bullion has soared about 25% this year and reached an all-time high in early August, amid bets on a weakening dollar and massive stimulus aimed at reviving pandemic-ravaged economies. The rally has shown signs of stalling in recent weeks, with a resilient greenback and concern over whether the US will push through additional stimulus. Germany's health minister warned that the trend of cases in Europe is worrying, amid expectations that restrictions could soon be extended to London. Former US FDA Commissioner Scott Gottlieb said he expects the nation to experience at least one more cycle of the virus in the fall and winter. US Federal Reserve Chair Jerome Powell is set to appear before House lawmakers Tuesday. The focus of the hearing will likely fall on fiscal policy, with time running short for Congress to agree on another round of spending measures before it shuts down ahead of the November elections. End of article. Reuters article dated 21st of September at 4:51 p.m. That's GMT plus 1. Headline: Precious. Gold slides 3% on strong dollar. Stimulus concerns. Silver tumbles. Silver down more than 9%. Platinum more than 6%. Dollar on track to post best day since March 19th. Close above $1,900 needed for a short-term reprieve. Gold slumped over 3% on Monday, sliding to its lowest level in more than a month, as a broader market sell-off, driven by uncertainty over more US fiscal stimulus, pressured the precious complex along with the stronger dollar. Silver plunged 9.4% to $24.25 as of 11:17 a.m. EDT, its lowest level in over a month. Spot gold dropped 3.2% to $1,887.26 per ounce and hit a low since August 12th at $1,882.69 earlier. US gold futures fell 2.8% to 1,906.80. Gold should be trading higher on safe haven demand, but it's kind of a repeat back like in the spring when the market sell-off comes. Market participants have been selling off assets across the board, said Bob Harbercorn, senior market strategist at RJO Futures. There's just a lack of safe haven buying, and it's following the sell-off in equities, and dollar strength is an additional weakness. Wall Street's main indexes hit their lowest levels in nearly 7 weeks on Monday, while the dollar index rose 0.8% against its rivals, its highest daily percentage gain since March 19th. The chances of Congress agreeing on any stimulus package before January is asymptomatically close to zero, said Tai Wong, head of base and precious metal derivatives trading at BMO. A move back and close above 1900 is needed to grant a short-term reprieve, but looks like we may have to test the lows of the correction, $1,863, at some stage soon. Gold prices are down nearly 10% from an all-time high hit in early August as hopes of further stimulus dwindled. The US Congress has for weeks remained deadlocked over the size and shape of a fifth coronavirus response bill, on top of the approximately $3 trillion already enacted into law. Gold has been feeding off progressive rounds of more stimulus, and the fact that this has stopped in the United States, at least for now, seems to have halted the gold rally in its tracks. ED&F Man capital markets analyst Edward Marr said in a note. Investors now await speeches by Fed committee members, including Chairman Jerome Powell, who will appear before congressional committees later this week. End of article. Interesting articles, but we suggest there may be a little more at work here. Already today, the British Prime Minister is holding meetings as we produce this with the heads of the 4 devolved governments to try and effect a coordinated potential shutdown of the whole of Britain sooner rather than later because of the sudden surge in coronavirus cases and an uptick in deaths. We're also being advised that the leaders of a number of European countries are doing likewise over the next day or so. There is genuine fear that this next wave of cases could potentially be worse than the wave we have had so far, or at least equally as bad. And so rather draconian measures are being considered to prevent this from happening. This will undoubtedly take its toll on manufacturing once again, and therefore, in our view, the disproportionate fall in silver prices, particularly compared with gold. Now, it could just simply be a knee-jerk reaction, an overreaction, which could eventually have the balance redressed again. But we suspect not at this stage. Much has been built into the silver price as the global economy began to improve and the industrial demand for silver starting to rise again. The fear now is that this could be further hit and potentially very hard. Now, European equity markets have closed down between 3 and 5%, and US markets are currently down between 1 and 3%. Now, yes, these figures, the US market figures that is, could change before the end of the day, but our reading of the situation is that there is more bad news than is currently being admitted to, and governments are perhaps intent on preventing another major pandemic crisis and may prove to act quickly as a result. Now this, we admit, is educated speculation at the moment, with some small amount of inside knowledge. But for those who stack gold and silver, any fall from these levels will undoubtedly serve to be a great buying opportunity, taking the next few years into account. We've said previously to be patient and not panic, and we could very well see over the coming days further price decreases if we are right, if the speculation is right. And if it's not, at least here is a lesson to us all, that no matter how bullish we may feel or be encouraged to be, there will always be market movements that surprise us in either direction. Now, if we find out more, we will of course advise, and this could just prove to be a healthy correction. That said, our data feeding through is that the virus is proving more virulent than many would have had us believe, and the various governments could be totally intent in locking us all down further and for longer. Goodness knows what that will do to our economies, though we can hazard an educated guess, and how those economies will recover from it. But we suspect there is a lot more pain still to come. And ironically, at this precise moment, investment managers are heralding the US dollar as the go-to safe haven asset. That may shock many, but that is what's being said on the street. Our conclusion: no need to panic and regard any fall as a potential buying opportunity, unless, of course, your safes and hiding places are already full. What do you think? Do share your thoughts. Are these price reductions going to hold and fall further? We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.